Hey, gang, we're back with yet another TA report. The three amigos are only dos amigos this week, GP.
Yep.
Nick has his own thing going on this weekend. And actually, just a programming note, he's out next week too. So you're going to be probably sick of hearing my and GP's just overwhelming bullishness.
Yeah.
Let me give you the link real quick, GP.
That sounds like a good idea.
Yeah, I'm going to put it
try
in the
to find
chat.
I can try to find some bearish charts. I posted one on Amazon thinking that it could potentially be bearish if you
You're
really
trying
wanted
to
to.
reverse jinx. I know what you're doing.
No, not reverse jinx. It's the reality, right? Like if I would have expected after this long for the candle to be strong and carry forward, not weak and close below the prior week. But a lot of this market has been stop you out and then reverse higher, right? So
Yep.
you need to
Yep.
see the confirmation candles.
Let me hit the YouTube. Let me hit the stock twits. I'm trying to multitask here. Normally I can let you and Nick talk for a minute while I try to send this out. But I'm going to post it right now.
It's so weird. Like Zoom doesn't let you copy the link that you sent. It's so stupid.
Hey Randy, how's it going? Thanks for always being here, man. You're a big supporter, and we appreciate that. Gives GP and I positive reinforcement.
Yeah, it's nice to see people come back. They're not just talking to each other.
Yeah, absolutely. And I kind of like doing the YouTube thing too. I think it. I mean, we don't really edit what we're saying out of when we record either, but it's just kind of nice to have it live. If there are people who want to, show up, great, and chat with us, that's awesome. If not, right, like we just sort of carry on with our normal thing, and I think it's cool.
Yep.
I think it's cool. Oh, so you were talking about Amazon, GP.
Yeah. So
and let me pull up. Yeah, I got the.
You're on the weekly pattern, right? So
yeah.
One thing about the weekly pattern, to me, it's bullish consolidation. But if you wanted to be a bear and argue the conversation that this could potentially, like if you're looking at this, go grab 2017 and on for the weekly pattern.
Okay.
Right. So you see where it topped out in 2018, sorry, right? And it had a sharp move down into 2019, the December
right
kind
here.
of October crash, right? What you can say in this conversation is we had the same sharp crash, but at the end of the consolidation here, right? This current consolidation. So you could say that this is not consolidation, but it's distribution, right? Like this was consolidation, it's pulling back on low volume, it's up and down, and then breaks out, right? But here you have up and down, and then crashes, reverses back higher, bounces, obviously, because it's Amazon. There's a lot of people in here, and you can see it potentially fail here. Because, dude, after this long, it's still failing 3,400, the June 2022, 2020 highs is a bit of a concern. Am I concerned because it's Amazon? No, but if the price action represents it, you got to kind of follow the candles. But what we were saying when we started this is, you can pull it up. I pull it up on StockTwist, so I shared it there as well. But what I see is just it's a potential, right? It's not behaving the same massive bounce off the bottoms. It shouldn't have been all the way to 2,600 anyway, but the market was weak and the stock kind of went with it. So you can potentially argue that this could be the reverse of the prior consolidation pattern that broke out, that this could be the distribution pattern with a quick move down, reverse, and then boom, back down. It's possible. I'm not saying that's what I see, but you see the similarities, right? Like how it kind of looks to
Especially right here, right? That's what we're talking about, basically.
Yeah.
And which is like the similar to that.
Yep. But in reverse order, right? Because this is happening at the end of the consolidation cycle, not the beginning. That you could argue that this is a distribution. I honestly don't think that's the case, but got to pay attention to the price action, because I was really I was hoping it was going to get a pullback because it had a monster move over 3 weeks. I wasn't expecting it to close below the prior week's candle. But once again, that in itself is not a bearish candle. That's you got to watch for confirmation candle, right? It's a reversal, but does it follow through?
Yeah,
and if it doesn't follow through.
And just looking at that weekly RSI, right? Like, I mean, it actually rolled over before it got up to what that trend would be. So, yeah, I mean, you can make a bearish case. I can see that. I'm not blind to that.
Yeah, and we had three, and the ultimate reality is, because Wall Street just loves their options and their premiums, we had Wednesday midweek options expiration, we had quarterly Thursday expiration, and then we also had the degenerate oh my god, the weekly gamblers, sorry. Yep. Friday options. You had three back-to-back OPEX is happening, and you wonder why we stalled. Like it's a no-brainer, right?
Yeah, I think so too. That's what we were just talking about right before we started. I mean, you had the quarterly rebalancing, you had the weekly, basically. Wednesday was just a fuck of a day. Pardon my French. I think more importantly, though, how impressed are you that I was prepared for just us today and had volume already on the chart ready to go, so I just turn it on and off. I think that deserves just a bit more bullishness from us both, that I was that prepared this week.
Yeah, that's impressive, man. After what, 2 months? That's not bad.
Yeah, I didn't have to go to it. We were also talking about the SPY and the S&P. What I thought about this, people see this, and I mean that's a big move up, right? From Monday to Tuesday. Monday was a nice up day, and we've come a long way off of this bottom here. I mean, that's been just a straight shot up. And then you have that gap up, and it's kind of blow off topish. You expect to give some back.
Yeah, absolutely, right? Like that to me makes sense.
Price pull in lose my.
I can't hear you, Bags.
Well, that was weird.
Yeah, I can't hear you at all.
The headphones died.
Oh, okay.
So we broke out the mic, which is fine. Sorry about that. Anyway, I'm not sure where I got cut off, but the long run off the bottom there, and then sort of the blow off top that we had on Tuesday, kind of expected to give some back. And I think last week we were even talking about, it would be nice to see it pull back in for another opportunity into the EMAs or into the moving averages. And really what I was most impressed with it wasn't Monday and Tuesday's move. It was really Friday's move. Friday's session, if we really look at it here, pulled in below the 9, but closed near the high of the day. To me, that's not a bearish scenario on a Friday. Just my take.
Yeah, it's interesting, like when you compare the SPY versus like the Qs or the IWM. I think the Qs had a bigger move, but I think the biggest thing here is to notice that you had 2 gap ups back in February that both got rejected, right?
Yep.
You had a gap up the first time into, what's that moving average, the yellow one?
The 50.
The 50, right? Hit the 50, rejected base, tried to attempt the 50 again, got rejected hard, and this time it broke down, right? Like, what we did in this swift 2-week move is not only take out this last pivot here from the beginning of March, but also took out those February pivots on that big move up. Now you're coming back and retesting that repivot, those pivot areas and holding, right? So those are standard pullbacks in an uptrend. Right now, if we fail from here and we just continue going down and we don't hold anything, then obviously it's not holding and it's bearish, and you gotta pay attention to it. But to be on, if you're the house and you're playing blackjack, you should be leaning in your favor right now, because there's enough bullish momentum and trends that are happening here that you can't ignore. And if we fail them, then obviously you should ignore them and try looking at more of the bearish tones of stuff, right? Like we pointed out Amazon, but it's the same here, right? So because you do see the RSI rolling over slightly, you see the MACD kind of still expanding, but the price is not moving, so that's a sign as well. That, like, it's just some things to keep in mind. But ultimately, on the Qs especially, you consolidated a few days at the 200 EMA, broke out of the 200 EMA, pushed right through the 200 SMA without any issues, right? You gapped right above it. You came back to test the 200 EMA, right? The 200 days. So you're in a similar scenario, and that's another one. You've had higher pivots here, right? It's not finding resistance to other pivots.
Yep.
Right? Like every other time, if you can see, starting from November, every time we bounced from the bottoms, came back up, we got rejected before it could even try to take out the prior all-time high, or prior high, right?
Yep.
So November 21st got rejected at the end of December. And then it got rejected again at the middle of January, then early February, middle February. Like, you could just kept doing it. And now what you had in one quick, swift move, which is impressive, is that we took out that pivot from early March, right? This, what candle is that? I don't even know, but date-wise, I think it's, sorry, I showed up, but it's like March 3rd, right? The March 3rd pivot. It was a kind of a close at 347.22 on the Qs, open at 349, and fully reversed. That's a bearish move, right? Tries to bounce here, tries to break out, completely reverses off the gap up, and then just goes straight down, right? Retest the bottom here. So you have essentially a double bottom reversal. And then you take out that pivot without even flinching. Look at that, right? Bags, those 3 days. What?
1,000%. Yes.
Yeah, that March 18th candle, right before that doji, the first doji there, right?
Yep.
It took out that bearish kind of reversal candle without flinching, right? Like, so you had to see the power as soon as that happened. Because if that didn't happen and you were rejecting that pivot, then you gotta you got to really get cautious. But not only did it take it out, it destroyed it, and then tried to push higher, and then now we're chopping around. So I think you gotta watch the next few days, few weeks, that we have to come out of this with higher highs and higher lows and continue to hold key trends while, and remember, this is not, to me, this is not going to be like 2020 in terms of the velocity of the move up. It's going to chop. It's going to chop a lot because the destruction has been a lot.
Right.
Bad.
And it takes time to repair that. Like you don't, unless you get the slingshot move like we did in 2020 in normal market conditions, right? And free money conditions is not normal market conditions.
Yeah.
You have to build your way up. There's the saying, take the steps up the elevator down, right? And this is building those steps up.
Yeah. And so far we're holding where the prior steps are, which is a good sign to rebuild that strength, because the indices didn't break down when the rest of the market started breaking down in February, March of 2021, right? Like you already had most stocks that had their first stage move down 40, 50%. Right. And then the market started to break down, and then the other ones had another 40 to 50% from there. So like from the all-time highs, 70, 80% moves down. Some even corrected the entire move up, right? So it's going to take some time to rebuild. But I think Duzio says it best, right? Wait for the huckleberries.
Right. Randy's chiming in on the chat here. Thanks, Randy. He says, volume seems a little bit or rather low for the bounce. And it kind of looks on SPY, kind of looks like a head and shoulders. I mean, it's, you can stretch and you can squint and try to make it that, but I wouldn't go so far to call this that.
Yeah, so
and he's thinking like 430, and I think we've gone over that quite a bit, right? GP, like if we don't hold up here, and I'm going to probably say down to like 444, 440, something like that. If we don't hold here, and especially above that on a weekly basis, I think 430's not going to be the bottom. I think it can definitely go further lower if momentum is not being able to be established and eventually built here. And I don't mean momentum as far as like a huge move up, more so what you're describing and as a building and grinding your way higher.
Yeah. And what you want to see, if you add in the 20-day back into this as well. So that's the 21-day, but the 20-day is crossing back over the 200-day, right? So your momentum is now shifting to the bullish trend, right? So that's something to also keep in mind. So now you want to see the healthy action represent the healthy repair that's going on underneath. You could get a inverse head and shoulder conversation, but what I wanted to talk about was the volume, right? If you're talking about, Randy, if you're talking about volume and not volatility, volume is always like, you just had 9 months of absolute destruction to people's portfolios. Like I know I'm in a couple of chats and people aren't even looking anymore, right? They're like, oh, screw it, I don't even give two about this market. It'll do what it'll do. I used to spend 5 hours a day. I only spend 5 minutes now. Don't care. Because everyone's kind of given up, right? Like it's been a beat down to all proportions. And you have the first bounce, and ultimately everyone is going to be pessimistic. Oh, it's just a bounce, right? I'm still not going to pay attention. And then what happens? So the volume on that side is always going to be, because everyone's hesitant. Like you've gotten smoked over the last 9 months holding some of these names. You're going to be really gun shy. And then when the volume usually picks up on the second stages in these moments. So there's stuff to watch for. is like, oh, well, that bounce held and now it's pushing back and everyone starts coming back in, like the trend traders, like the day trade, not the day traders don't care, but position traders, the swing traders, those are all, and then institutions and individuals all start coming back into the market. They sold at the lows, they're buying at the mids, hoping to catch, the next move up. And that's when you start to see more volume come in.
So one thing I like to do, and shout out to Cookie, he's gone over this quite a few times, is just draw an imaginary line. Just imagine what the moving averages are doing, right? And that's pretty close. I mean, we're not trying to be exact here, but basically you have all of them pointing up in some degree, right? So you've got the 9 here, you've got the 21 in green, you've got the 50 in yellow, you got the 120 in purple, which is flattish but still up, and then you got the 200, again flattish but still up, right? It's not dead flat, and it's definitely not pointing down as of yet. Those are all bullish indicators to me. That doesn't change my thesis at all, regardless of what happened on Wednesday, Thursday, Friday.
Yep. The SPY, the 50 also never crossed below the 200 on the SPY, right? Like those are things to notice, that if you were kind of in a downtrend, or like if you're in a prolonged downtrend, you would see these moving averages start to break down, right? So the fact that the 50 didn't cross the 200, they're starting to now slope up, and now you have the 20, which is your short-term trending kind of thought process and moves, is now trying to cross back over their moving averages, right? So they're all trying to restack themselves. Which
and
once they
extend them out, right? Like once they all cross over, that is a very bullish signal. There's really nothing left of, as far as moving averages goes, that remain until price gets way overextended above all those. So to me, that's just a very bullish indicator that I look at. And I don't just do this on the S&P. I look at it across whatever I'm interested in or trying to chart or whatever. So I just think that's always a good thing to look at. Just extend those lines out, and it gives you a little bit of insight as to what they might do. Zach's with us. Hey, Zach, how are you? I guess Airbnb, since Zach's here, we better touch on that. I know GP, you've liked Airbnb for a couple weeks now.
I'd like to, even when we started talking about it, I was like, I really wanted to buy it under 130 and never got there. And I put money to work in other places. So I didn't want to have, I wanted to still have cash, right? So I didn't want to go too far in the coffers.
So look at this. I mean, this is doing exactly what we were just saying about the S&P, right? You've got the 9 on top, the 21 next, the 50 is going to cross the 200 and the 120. So, I mean, that's really all you can ask for as far as getting set up for some bullish continuation. Now, that doesn't mean price won't come in and check off, any number of these levels here. But that looks constructive. When I say constructive, it doesn't mean that it's necessarily a raging bull chart, but it looks like it can move higher. And when you have a setup similar to that, I kind of tend to lean that way.
Yeah, and are you also watching? Like, I don't know if you guys are paying attention, but everything is taking turns being parabolic, right? We started with lumber, I think a couple like last year, and then oil, and then gold, and now look at the stupid move that XLU made last week.
Utilities.
Yeah, like come on, like really?
It's freaking utilities. I mean, heck, look at the move it's made basically all of March.
Right, but this is all parabolic type behavior. So there should be levels of concern in the overall market, because this is not healthy type action, right? Like
And this is what I'm talking about too, with the extension of the EMAs. Like, it's okay to be above the 50, it's okay to be above the 21, and it's okay to be above the 9, but that's a pretty significant extension from here down to here, down to here, down to here, right? Like that is classic overextension.
Yeah, plus it's weird because if you're looking on a monthly basis, it doesn't look too extended. But it's also utilities. Utilities don't move like growth stocks, right?
Nope.
They move there. That's the reason they're utilities. They're steady, they pay dividends, they're safe. When things go bad, when things go good, they kind of stay grinding to the upside. So when you start seeing these kind of parabolic moves in safety assets, and the other market is kind of staying flattish or going down, it tells you that money is just rotating. And ultimately, there's only so much money in the markets to rotate between the different names.
That's the second biggest move since the pandemic low in utilities.
Yeah, it's a bit too much, right? Like, but they're doing it, so it's what it is.
It is what it is. Randy says, so are you saying that tubes are driving? I don't understand. Toots, the institutions are driving this, and will retail end up chasing the leg up again? I think retail will always end up chasing the leg up again.
Yeah, I'm in the same boat because most investors look at Tiger Global, right? Tiger Global is a big fund, and they've had their worst couple of years. They didn't panic sell everything and get the hell out, right? What they're doing is they're subscribing to what they believe, and they're believing that their fundamental thesis in investing is going to pay off the long term. So yes, we might have a year or two where we underperform, but what's our general overall theme? And retail is too worried in general about, oh, well, you're a terrible trader because you let a stock go 70% against you. These guys don't really care, right? They have money, they'll add more or they'll wait it out. So I think retail always ends up losing the bigger picture unless you can see it for the longer term. And not many people can, right?
No.
How many people do you know who own Amazon from 2000, 2001, 2002, 2003? Probably very, very few people who do, because they can't handle what it went sideways for 10 years before it broke out.
Well, it's like one thing that we've brought up in the past. Being bored is not a reason to get out of a trade, right? And getting out of a trade because price is going against you is one thing, right? I mean, there's always a reason to sell. But if the fundamentals of the story hasn't changed, the business hasn't changed, was it a good thesis, right? And usually you just have to be patient in those situations. And that's why, for me as an investor, right, and we've gone over how I think about this in the past, is I'm comfortable holding the names I have until the cows come home, basically. I'm not worried about Apple, going out of business and losing, $3 trillion worth of market cap. I'm not worried about that. Amazon, same deal, right? Like, Amazon's my single biggest position currently. And is price action what I want it to be? No, not exactly. But at the same time, is Amazon's business worse today than it was? Now, sure, you can argue fuel prices, but again, like, Amazon's selling just as much as it ever sold. AWS is bringing in more than it's ever brought in. So has my thesis changed that much? No, not in the longer term. So I'm comfortable holding that. And I think too many people are trying to be the trader, right? And trying to make 1,000% on a day or swing trade. And that's the exception, not the rule. And I think that's just how you have to look at it. What type of
try to time the markets, right? Like, What's the saying? Timing the market is better than timing
Yeah.
the market,
Yeah.
right? So,
Yep.
um, in general, overall thesis, we've talked about this quite a few times, right? The SPY, the Q, all these names are ETFs, and their holdings are constantly evolving. So they're designed to progressively go up over time, right? If you're an underperforming stock or a fraudulent stock, you'll eventually come out of the S&P or the Q and be replaced with a company that's actually doing things. And the Dow and all, Dow's a little bit more archaic, but the same kind of concept holds true. So it's just something to keep in mind, right? Like it's if your thesis was I'm going to buy Apple and I think it hits a $3 trillion market cap, and it hits a $3 trillion market cap, and you're not taking some profits off, then you're being greedy, right? Then your thesis played out, yet you're not you're not taking profits and reinvesting in places that you might see elsewhere. And so for me, it was something that I did with Tesla. Like I'm not holding my Tesla full position because when I bought it, it was at like 35 billion, and I assumed it could get to a $1 trillion market cap based on what it was doing, and it did. And when it did, I took my cash off, and the rest are ride-on free shares. I'm not going to touch those, and I actually added a couple of weeks ago when it got to the 700. So it's the thesis is that it can be bigger than a $1 trillion now, right? You have to reassess your thesis over the long term. But you know how many times in the last 12 years Apple was going to shit the bed?
Well, I mean, just 2 weeks ago it was, but yeah, a lot.
Every quarter, every single quarter without fail since nearly 2010 has been their iPhone production is slowing down. No one's going to buy an iPhone. They're dead. They are dead. They sell 50 billion iPhones a quarter. So, like,
and the service revenue is not doing too bad either.
Yeah, the service revenue is actually bigger than, like, I think a 75% of the S&P or something like that.
Yeah, that's what I'm saying. It's not doing too bad. And just looking at the chart, I mean, yeah, you would have loved to see this be able to break out over that, right? Like, I mean, of course, the Bulls would love to see that, but it's just biding its time. Look at the stacked EMAs like we talked about, 5 minutes ago. I mean, this is just biding its time to be able to make that move. And could it come back into 165, 163? Yeah, sure it could. But it's not something for me to worry about, to be able to hop out and be like, okay, I'm gonna sell it here and try to buy it back at 150, which may never come again. It may not. Who knows?
Thanks. I sent you a link. This is the stuff that makes me laugh, right? On the chat
yeah, I see it.
Right. So if you open this up and put it up on your on the screen share here.
Yeah, I will. Hang on. I gotta get there. Got too many windows, but I'm working it. So here we go. Let me throw up a new window to share. There we go. AirPods generate 6 times more revenue than Twitter. Just the AirPods. Just the AirPods. Right? No other piece of equipment. Nothing else in the business, just the freaking AirPods. And it almost, I mean, that's pretty close to Netflix, really. I mean, if you really think about it, right?
Yep.
$23 billion just in those little white doodads that, one of them died when I was on the call, and that's why you couldn't hear me for a couple minutes.
Yeah,
exactly.
Dude, and nearly the revenue of Tesla in 2020, right? Tesla's obviously growing, so that it's not as comparable, right? But that's 2/3 of the revenue in Tesla. So shouldn't AirPods alone get 2/3 of the market cap that Tesla had?
Right. I'm saying.
So
Hey, GP, just curious. On the move on Tuesday, did you happen to sell anything? Because I did, and I want to go into what I sold and why, but I'm curious if you did.
Of all the new stuff I added?
Well, just anything. If you sold anything on Tuesday into the gap up.
For my trades and stuff, yes, but Investment wise, no.
Yep. So what I did was I had the kids in this SoFi social 50 stocks. And I took profits up here. Not because I don't believe in, basically it's the 50 most bought items on SoFi, or stocks bought on SoFi. So you've got Apple and Tesla and Amazon, but then you've got GameStop and AMC and whatever else, right? So I took profits there, and I moved quite a bit of that into XLG, which is a more traditional ETF, which is the top 50 of the S&P 500. I didn't really want to be holding some of those trending or meme stocks in the kids account. So I closed it out. I took 17%, and it was the right thing to do, because when you look at it, I mean, that was 6% down move, right? That changes 17% a lot lower really quick. So I kind of like moving them into even a bigger mega cap ETF, as opposed to some of the meme stock stuff that, I mean, we profited in, but at the same time, it just didn't feel, it felt irresponsible for me not to take action, basically.
And that's totally makes sense. So like this downturn was, to me, an opportunity in individual names versus the indices. I like indices when they have their massive moves down, right? Getting into not this general kind of, it's not bad if you're dollar cost averaging, but I felt like the opportunities in names like Facebook and Amazon and Tesla were going to provide greater returns over time. So these were things that when I added, I wasn't looking to sell. I was looking to add on further weakness or anything like that. So just because it's popped, I don't know, I think Tesla's up. One of my buys was around 720 for Tesla. So it's up like 40% since I bought. The other ones were under 800. So I'm not looking to sell that, because I think the move is bigger over time, right? So getting opportunities like this to buy, but I do like I put on MQ. I will be trimming once it pops, right? Like
MQ,
yeah.
Marquetta. Ranveer wanted my thoughts on Marquetta.
Right.
I think he reached out to you. He said about it already.
I posted a chart on it, but to me, this is a trade, right? So I didn't get the low bottoms here because I don't want to hold this. I don't like IPOs early on. I just want them to get some history on the charts and stuff like that. That's personally how I see it.
I think I actually have an MQ chart done up that I did for someone else.
Yeah. So to me, this is a trade, right? I'm in around 11, and I will add if it goes slightly lower here. But I think when this consolidation type action here, this 10 weeks tight breaks higher, I'll be taking off most of my position, if not all of it. Because the goal here is to get the move to like 15 or 16 before it gets rejected, and take those $4 or $5 and be out. I'm not.
I agree with that, GP. I think that could probably see that 15 or 16 area. I would probably be looking right through here, right, for a pop up to there, maybe.
Yeah,
which would be the lower side of 15 in the 14s up to nearly 16. I think any of that would be a reasonable pop. And if you bought practically anywhere in this area, right, you should be pretty good. I mean, that's a sizable move if you decide to take profit. So it's at $11 right now. So you're gonna complain about 35%? Probably you shouldn't.
Why not? I wouldn't complain because this is an IPO, and by IPO I mean any stock that has less than like 3 years of history, right? And this doesn't have 3 years of history, so it's going to continue to grind up, down, up, down, up, down, as people who didn't get a chance to get in as a VC or didn't get to get a chance to get in on the IPO, they're going to bring the price down and they're going to accumulate, if this is a stock that they want over time, that they're going to accumulate. So
What time frame do you like this in, GP? Just curious.
the daily.
No, well, I'm saying for this potential move, and if that's proprietary information, you don't have to share, obviously.
No, it's I'm thinking it's got to happen in the next couple of weeks, right? If you draw a trend line from the July low to the October low, you'll see that it's kind of, yeah, right, that low to the next low there. You see that it's kind of, if you extend it all the way down, it's flagging above the 20 and below that trend line. No, mine's drawn differently.
I'm on log. I don't know if you run log.
No, I'm on regular. But yeah, so mine looks a little different. Mine's just regular, not log action, but it's
stay on the log.
Yeah, it's just flagging below a few things, and it's if you do the weekly, you'll see that it hasn't moved more than like $1 or $2 in 10 weeks.
Yeah, I think you're right. I mean, if I just look at it on the daily, to me, it looks like it's trying to build under the 9, above the 921.
Yep.
The 50 daily doesn't tend to be heavy resistance, but that downtrend that it's in is. So I see that downtrend, the black line there, as being more of what's holding it down than the 50. Yep. And then once it gets through that, which could be days or a couple of weeks, it could absolutely pop.
Yeah. So that's for me, MQ is a trade. It's not a long-term hold, right? But like, if you're talking about some of the things I bought, like Square, I started buying in like the 110s and stopped buying in the 80s. And I think that's a really long-term hold over time. So when you get a pullback of this magnitude, I'm not looking to get out in the first 20, 30, 40% move, right? I'm holding for the longer term.
Yep. For sure. The other one Ranveer wanted us to look at was PayPal. And I got to be honest, I haven't paid too much attention to PayPal recently. I know it's been working off the bottom, but yeah, I think that's a safe way to say it. And I'll pull up a chart that I've actually worked out, so I don't have to sit here and do it. But I mean, to me, this is what the setup is you want to hold that bottom, right?
Yep.
And anywhere in between, you're in no man's land until you get above this guy, or you find your way going under this guy, right? Like,
yeah, there's lots of damage, man. That's the reality in PayPal. And
there's no way to say it. I mean, it's not pretty. While it is above the 9 and the 21, like there's a ton of work left here to do.
Dude, and that 140 level is going to be miserable, right?
Yeah.
Once it breaks the 140 level, I think it'll be a lot better trending. But
yeah,
that 140 level, that's large volume capitulation move down, right? Like that's fundies saying, I'm done, I'm out.
Yeah, I agree. And I've loved PayPal. PayPal is one of my favorite holdings for a very long time. I try not to have favorites. I try to look at them as their own thing, but it was such a winner, right? Like it did so well.
Yeah.
And yeah, you're exactly right, Randy. No, just no bad. It's bad in this market. Right now is not the time. And I think I pointed this out. Either I stock tweeted this or I posted it or we talked about it here. I don't remember. while Visa and MasterCard are looking constructive, like I want to see them finally get their legs before I'm convinced that PayPal is going to get theirs. Right. And
Yep.
while, yeah, Visa and MasterCard are looking much better. I mean, they're not looking good enough for me to be like, oh yeah, now's the time for me to go heavy in either one of these. Just my one man's personal opinion. This is not investment advice.
Yeah, agreed. But like, so like, if you're looking at one of the beaten up names that you have more, I have more conviction, it's Snap, right? Snap is the one that's doing better resolving, right? It had a pretty solid week.
Yep.
It's still below the kind of the earnings gap up level. But they're building over time. The moving averages are repairing themselves. It's still got work to do, but this looks better to me than on that week last week. It was one of the ones that closed near the highs of the week, right? Like in the tech space.
Yep, it was.
So that's the one I'd be kind of watching for. It reclaimed the 50-day on the daily, and continued its strength into Friday. So that's the first thing I noticed on Friday in general was there was excuse me, if you're looking for trends in the early parts of quarters, most of social media had a pretty solid day on Friday, but to be honest, kind of all week, right? If you look at Snap, if you look at Facebook, they were all kind of relative strength compared to their peers. So I don't know, maybe they're seeing improved ad revenue, e-com. I don't know what it is, but there's obviously someone coming in and saying, I want to be long these names again after
All right,
demolishing.
here's a question for you. You had to put new money to work on one of the three main socials: Facebook, Meta, Twitter, or Snap. You going with Snap? Who you going to put new money to work with?
That's a really good question. Twitter never. That
Well, I knew that. I knew it was going to be between. I knew Twitter was not going to be in the running.
Yeah, what I like about Snap is if you go to Snap on the monthly chart, I think Snap here, if I was based on, if you're going to judge me on percentage gains, then Snap, right? You see the IPO high.
Yep.
Sorry, not so the opening day high, right? The IPO high. It essentially 3 wicks off that, and essentially put in two back-to-back hammers off that level. So it broke out. It came back to retest the IPO high, and it's held. It closed over the 50-month moving average. It tagged the 50-month simple moving average. It tagged the 200-day, and that volume, their surprise profit off their earnings, all that stuff, that volume that came in at that IPO kind of base area 3 months in a row, is just something that I'd say Snap probably outperforms percentage-wise Facebook over time.
Now, are you answering this as a trade, or are you answering this as a long-term investment?
Long-term investment.
Okay. I can get on board with that. I was just curious.
Yeah, so like that would be if I was holding for the next 5 years and I can only choose between Facebook and Snap, I would say Snap here based on projections on where it can go. And they're in tune with the younger market, which Facebook continues to fail at. They're trying with the metaverse, you know what I mean? Like they have not been able to capture the younger audience in a really long time. TikTok came, and within 2 months, captured more audience than Facebook could ever under the 16 age, right? So
On a percentage basis, long term, I don't disagree with you that Snap very possibly could. If it's a trade, and by trade, I don't mean days or weeks, but in the coming months, I think Facebook might have some performance of its own with
yeah.
the midterm elections coming up and how much money is going to be spent on the platform. I think that could be a boon as we approach the third quarter and into the fourth quarter. So we'll see.
And it's relatively cheap compared to its mega caps, right?
Yeah. Well, it's cheap for a reason, right? We've talked about that in the past too. Things are cheap for a reason, and compared to its peers. But no, I like Snap too, and I don't have any interest in being long Facebook Meta right now.
Yeah.
But through the end of the year, we could see some price appreciation there. Let's take some questions from guys here. We got like 10 minutes left.
Yeah.
So if there's a chart you want us to look at, shout it out. Zach says D-Lo. I don't even know that I've ever charted D-Lo.
Is this like a website for women? D-Local?
Local Limited. I have no idea what D-Lo is. I couldn't tell you what their business is.
Like, what is this?
I don't know. Zach, what's D-Lo?
Is this like a twin brother to Snapchat?
Zach, I sent you an invite to the session if you want to hop on and tell us what D-Lo is. If not, no worries. But if I just look at the chart.
Oh, fintech.
Bull flag looks to me. I wouldn't call that a bull flag necessarily. I can see how you get there, but I wouldn't necessarily call that one since we're not.
Zach knows how I feel about IPO, so I don't know why he's asking.
He said, "Are you serious? It's a gem." I mean, good. I hope it works out well for you, Zach. You feel free to come on and defend your position.
It looks similar to MQ, right? So
yeah,
from
not terribly different than MQ.
So from that perspective, for trade, yes, but I don't want most IPOs unless it's a IPO that I really want to be long for a long time.
Zach's
I don't want
mad about it. Oh, here comes Zach. Zach has entered the chat. Shall I let him in? I'll let him in. Zach, our good friend Blackouts, is here to defend his position on D-Lo.
Hey guys.
What's up, brother?
Hey, Zach, how you doing?
Hey, good. So, in 3 years, GP, I highly suggest that you come back and consider doing a deep dive once it gets past this IPO stage.
I will. But fintech in general, like across the board, is like in a down round, right? Like, and then you have the financials kind of looking weak here on multiple timeframes as well. And it's a new IPO. There's just too much for me to say, willy-nilly, I'm just gonna get long, and I don't know anything about the company. What's the market cap?
10 billion, I believe. No, 5 billion.
On how much in revenue?
That was 10 billion, I'm sorry. Let's see. Where you at, D-Lo?
Well, why I'm not convinced of the bull flag though, Zach, is I would have liked to see this above the base up here for me to get bullish. Not to say that this can't break out and continue higher. It absolutely can. But to have a nice bull flag, I want to see that into strength, and it's really not yet. Anyway, I mean, it could totally make me sound stupid by making its move, but
is it trading at 50?
It's incredibly expensive. It's incredibly
50
expensive for a
times
reason.
revenue?
I'm telling you, it's incredibly expensive for a reason. That's all I'm saying.
It wasn't snow incredibly expensive for a reason and then lost 50%?
Well, D'Lo did as well. Look, it jumped all the way up to
Yeah,
what?
it was like $70, $72.
So my average is 28. So I feel good about it. Like, this is a long hold. I'll buy more if it goes to 20.
73.43 was the all-time high.
Yeah.
Quarter over quarter growth is 20%. Why is it expensive? Can you explain it to me? Why? Besides it's expensive for a reason, why?
So they're just growing exponentially. The business model basically is they give companies the ability like Apple, Microsoft, whoever, to sell their products in regions where maybe it's a little bit more difficult from a currency standpoint. And the way the business model works is once they do this, it's a long sales cycle. But once they get this up and running, they get a portion of all the profit. So it's like Visa and MasterCard in that way, right? So every single transaction, dLocal gets a percentage. And so when these businesses partner with them, they basically become a part of the business and any revenue that goes through it.
So about 100 times, 100% growth year over year, it looks like, last 2 years. I'm doing this on the fly, so I might miss a lot of information. But at $10 billion, that's still 50 times revenue. They're not profitable, I would assume, at this point.
They are profitable.
They are profitable.
So there you go. We're learning new things, GP. Thanks, Zach.
Yeah, it still seems stupid expensive.
Well, I look at it like this, right?
I'm a risk taker.
You've got roughly 16% to break through the area that it needs to get above, right? And I think you could, I think one who would be interested in taking this can maybe trim some there and see how it acts once it gets in. Once it gets in this range, right? And if that were to happen, then you've de-risked some of your position. And if it goes to the moon, like Zach's telling us, then you've got.
Yeah. So the daily chart looks good. Don't get me wrong; it's basing, right? I'm thinking long term kind of investment perspective. I don't really.
Yeah.
I struggled with why Rivian came out at $100 billion, right? It's just something that.
So there's some really good podcasts you can listen to from the CEO of dLocal, and of course, it's risky to listen to CEOs because they're salesmen. But I don't know. There's some smart people behind it. I think you'll like what you see if you spend some time checking it out.
Randy says Limelight Networks, LLNW.
We'll do, Zach. I'll check it out.
Randy, has this one been trending? I feel like I've heard of Limelight somewhere before.
Oh no, that's LimeWire. I was gonna say, is this the one that they share music via MP3s?
No, I feel like I've seen it somewhere before. I don't know.
The futures open down except for small caps.
Futures open down. Not down big yet. Randy, just looking at the chart, like, I mean, it's made one hell of a move from October when it was a $2 stock. So it's a $5 stock now. I generally don't buy too much down there, but from a chart perspective, I mean, it seems like it likes to catch the 21 and then go higher, at least in this recent trend. 2150, right? So you had that, you had that, you had that, you had that, you had that.
It's cheap.
I would say, the one thing that would kind of give me pause is it's making new highs. You have some negative divergence there. RSI's trending lower as price goes higher. That's worrisome for me to be a top signal, but
But the weekly's showing you differently.
Yep,
The weekly RSI is breaking out.
breaking out. Yep.
So Limelight is just notorious for, because I've looked at this company several times. They're notorious for being a tease, right? And so they'll do this. They'll get people saying, okay, this is the time it's actually going to make its move. And it just falls apart.
It's a $700 million market cap company. It's going to be pushed around easily, right? Like it's just going to happen. This is one of those smaller positions, wider stops kind of companies. But did they earn $230 million and it's a $700 million company? So,
Well, haven't even been paying attention, and Daddy Bitcoins moved up 1.5% while we've been on the call, basically. So that's very constructive.
So every time Bitcoin's at resistance, it's time to do a live session.
yeah.
Well, you guys know how I feel about Bitcoin and crypto in general. So, I mean, what we have here is this was the resistance coming down from, the last week and a half's moves. So, the last week's really move. And as long as we close up here, 47 would be really a really great weekly close, in my opinion.
It's flagging, nicely flagging.
Yeah, it is. See what I mean about the flag? Well, you were saying flag earlier, Zach. Like at least this is breaking above its range when it's trying to do it, which gives me a little more giddiness, a really nice feeling, as opposed to something that's flagging below it.
Yeah, and if you go back to D-Lo, I think that's where he was talking about it.
Yep.
It's been a series of lower highs.
Yep.
Right, since November. It has never broken higher than the prior pivot, right? And it's a series of lower lows. So it looks like it's basing, but it's got to show.
Yep.
It's got to show that it can take out these pivots for me.
Eventually it's got to break that 3740-ish level. Either it has to test it or it has to fail it, right? Or break it or fail it.
Yeah.
So explain to me with the bull flag scenario, right? So obviously I'm still learning technical analysis. And so does it look like that red candle is what you're thinking, that weakness there in the middle there of a potential flag is why you would say it's not foaming up?
No, I mean, it definitely is flagging, right? Like this is a flag. Let me get this off the screen real quick.
But Zach, while he's doing
flag.
That, yeah.
The point that I'm making and what GP was saying was it's flagging below its pivots, below its base. See, this is its base, right? So if it were flagging like right here, right, I would feel better about it. Or even like right here, I'd feel a little bit better about it. Like just like right at the base. But this is flagging below that resistance at the top. And you've got these pivots, right, that have been tested, and then you get a lower one, right? And then you get a lower one, right? And then on the lows, you've got a lower one, and then you get a lower one, right? So there's nothing right now that, again, it is a flag, but there's nothing that makes it, to me, feel like it's a high conviction flag, a high conviction bull flag.
Right. So when this Zach, when it took out that mid-March pivot and it moved higher, I would have expected it to take out the mid-February pivot high, right? For strength. Like if you look at the Qs, like that's what I would have wanted to see to say this is strong, right? Like the Qs took out that mid-March pivot, and what did it do? It took out the mid-February pivot and then came back in, right? Just so like if we're looking at like if you're arguing semantics of bullishness or bearishness, it's just not as powerful to me. But it's in a base, so it could base like this for months.
Here's another question. So if it breaks out of this flag to the upside, do you think it can pretty easily fill that gap back from
No, that's what I was saying. I think it's got to get to 37.40 first. And if it breaks out of this wedge of this flag, it's going to go to
I see.
here. Now, is it
Yeah.
going to test that or test it to break out, or is it going to test it and fail? And that's what I was saying. Like, if I were so inclined, like I might ride this up to there, take some profits. And if it falls down, then maybe we have another shot at accumulating some more. But then if it breaks out, then I can scale out a little bit more and I've de-risked the position.
I like it.
Also, when it comes to gaps, right? The first gap usually gets rejected. It hasn't even tried to fill the gap. So if it does try to fill the gap, I'm assuming that's where you will find fairly hard rejection the first time around. So try to fill the gap, come back and retest that 37 level, hold, and then break higher.
So
is
this would be
probably-
step one, right?
Yeah.
And then this would be step two, right? And if it keeps going, great. But chances are either on step one, it might come back in, or in step two, it might come back in. It's kind of the way you'd be approach. It's kind of the way I would be approaching it, is the way I'm saying it, trying to say it.
I'm trying to think of an example of where that gap kind of
So
gap
coming back
down.
to Bitcoin, let's bring it full circle and then we'll wrap it up here,
Yep.
right? So pivot, higher pivot, basically the same pivot. Now we're getting a higher one, right? So each one we're going higher. Lows, we're getting higher, right? And so this flag that is forming here is higher than what the base was, right? You see what I'm saying, Zach?
Yes.
So to me, that's a higher conviction bullish flag than D-Lo, but it can prove me wrong. There's nothing to say that it can't go through those levels, but that's kind of the way I would look at and approach it. Thoughts on transports getting crushed? Max, we haven't covered transports. What is transports?
IYT. IYT.
LIT?
IYT.
IYT, yes. Transportation. Wow, they did get crushed, Max. Max, what are your thoughts on transports? That's not, if you go by Dow theory, right? That's not a great thing. Dow theory, transports kind of help lead.
Yeah,
bullish
and it was
market.
mostly FedEx, I believe.
So you don't like that series of higher lows or lower highs rather.
Yeah.
And on the RSI, I mean, it's done the same thing basically. But yeah, that's a huge slap down there on Friday.
Yeah, that's a massive slap down. Plus
Cut through everything.
daily MACD is crossing down. This probably accelerates lower.
Yep.
It's right into the gap, bounce at the gap. If it breaks that gap down, it's probably going to take out that 240 level, 242 level.
Yep. This is the opposite of constructive.
Yep.
Yeah, I could see it even wanting to get down here toward this 230 even GP. Like you got to
Yeah. So far, everything's come back and tried to like test their bases.
Yeah.
So if this move is legit and it does move down, it comes back and tests that 208 to 211 area.
There's not a lot I like about that chart.
Yeah,
It's not a lot. So you said it was mostly FedEx
FedEx got smoked on
Friday.
Friday.
Yeah, it did.
UPS and FedEx, those two things got smoked.
Yeah. Well,
Which is
guys,
interesting because Amazon did not get smoked, right?
no, it did
And
not.
They're
Well,
they're in the delivery business too.
It begins pivoting into what we already know, right? GP is like Amazon's always going to sell things and they're always going to have, but the business is becoming more and more AWS, and that's a more profitable side of the business.
Yep.
So,
And what you're seeing is
it's
rotation.
less
is
of a
what I would say.
transporter and a retailer, and more of a true tech company.
Absolutely.
All right, guys. Yeah, Max, absolutely one of the best market leading indicators out there for sure. For sure. With the transport, especially if you believe in Dow theory. All right, GP. Hey,
All right.
Zach, thanks for hopping on. Thanks for defending D-Lo and teaching us something new. We appreciate
Add it
that.
into my watch list.
We appreciate that. Education's a good thing, and that's why we're here. We just try to share what we've learned, and I think that we've seen quite a few people give us positive comments about that, so we appreciate it. Randy, thanks for always being here. You're always so participative. And Max, thanks for hopping in at the end. GP, muchas gracias, mi amigo.
Yeah, appreciate
thanks
it,
so
man.
much, brother. We'll catch up when the market opens in